Since US President-elect Donald Trump intends to do things differently in Washington, it was always a reasonable bet that most of his appointees would follow suit. Steve Mnuchin went on CNBC not only to announce quite brazenly that he was Donald Trump's Treasury Secretary pick, but to outline what he thinks of the US economy and much else besides. He may have been polite about Federal Reserve Chair Janet Yellen, saying she had done a good job, but he was not shy in commenting on the direction of interest rates. And after all, his new boss's campaign criticism of Fed policy is not easily forgotten. There will be some investors who, perhaps used to the sombre, formal style of outgoing Treasury Secretary Jack Lew, will be in for a rude awakening once Mr. Mnuchin hits his stride. But so what, say some analysts. The way the ex-Goldman Sachs banker presented himself to the market was indeed unusual, but the whole Trump government, he says, has been unusual anyway. The signs are that most investors are starting to accept that the unconventional Trump approach is here to stay. It wasn't the Mnuchin comments that drove the dollar index 0.5% stronger, the S&P 500 to a new record, and Treasury yields higher, but strong private sector jobs and personal income data. The Trumpflation trade is in rude health. Barely 3 weeks after the election, a settled view has descended on the market that the era of central bankers calling the shots is drawing to a close, to be replaced by politicians driving a pro-growth agenda of tax cuts and fiscal stimulus. Mr. Mnuchin's TV outing was as clear an indication of this as investors could get. But the one question he chose to bypass was the strength of the dollar. This is a paradox for the new administration. The more the market buys into tax cuts and infrastructure spending designed to boost US jobs and businesses, the more the dollar and US yields rise, which damages exporters' competitiveness and threatens US jobs and businesses. As Derek Halpenny at MUFG points out, the 10-year Treasury Bund spread is at its widest for 27 years, and he says there are risks that further sustained dollar strength could become disruptive for financial markets. For now, investors and Mr. Mnuchin can focus on tax changes and spending plans. But at some point, they will find these pressures hard to ignore.